Okay, so we are an hour after London close. Today is Monday, February 5th, and let's get into the market update. We continue the risk-off sentiment from last week. Now, many of you remember Dow Jones had the biggest drop, not in historical term, but the third and fourth biggest drop, and equity market pretty much all had a gap down from the January, because January was a really promising month for the US equity and the global risk sentiment. But for whatever reason, the non-farm payroll that had boosted the inflation expectations, and that also boosted the bond yield, and of course that correlated to pressure the equity market. And today we continue that risk-off sentiment. In fact, from the Asian equity, everything else to the European equity, right now to the US equity, all across the board is a red figure. And it's not just a small risk-off sentiment. Pretty much all major equity index had down 1% to 1.5%. Now, the US equity obviously just opened for about 2 and 3 hours right now, so we have to see what happened after the New York session closed. But if you take a look at the currencies, obviously US dollar gained a lot of tremendous strength, not so much in terms of the figure, but we are right now firmly above 89.50, and that's a really good news, a really good numbers comparing to before when the DAX was really heading toward the 88 handle. Now, in terms of the currencies, the strongest currency, US dollar, obviously reversed its course from last Friday's positive NFP. But right now, the most bearish currency also reversed its course is the British pound, because British pound from last week or before that was a pretty strong currency. But then today we opened the market, as you can see, with a negative service PMI number. And in fact, this number also still above 50, but this number reading was the lowest reading since September 2016. So it was obviously a very big blow for UK, especially the service industry is the biggest industry for UK. And don't forget, Thursday we'll also see Bank of England events, so I wouldn't really recommend people to jump in just sell British pound out of this catalyst, because the Thursday Bank of England event will have a much bigger impact. Now, politically speaking, we also have the round of negotiation with Brexit and with UK and EU, and today we have another negative political sentiment, saying that the UK Prime Minister might be ousted again by her own Conservative Party. Now, this was a occurring scenario ever since last year, or ever since PM May become the Prime Minister. So, not something too new or surprise, but that negative sentiment plus the negative service PMI obviously diminished and pressure British pound all across the board. So British pound become the weakest currency for now. Now, obviously, the current risk-off sentiment also pressure commodity currencies such as Australian dollar, New Zealand dollar, and Canadian dollar. And for Australian dollar and New Zealand dollar also has the central bank's events this week. So again, a lot of volatile events that's going to happen. And the best course of action is to, unless you know for a certainty what to buy or to sell. Otherwise, I personally would just stay out of the market unless I hear a clear direction from the central bankers this week. So for example, if I want to buy Aussie, I'll definitely wait after the RBA. Same thing applies to British pound. If I want to buy or sell British pound, I want to wait after the Bank of England event. Now, Euro, on the other hand, is still a very strong currency. Now, on top of that, we don't really have much catalyst for Euro for this week. So that means the strength of Euro might not be blocked or stopped. So it should still enjoy a strong currency, a strong sentiment. Okay, so that's pretty much it. Today's Monday, of course, quiet Monday session. But after the New York session, on the Asian session, you will immediately see the RBA event. So watch out and tune in for that. Thank you.